Hey, what's up guys? John here. Mortgage rates, you won't believe it, 6.358% if you have a 700 credit score. 8 months ago, what were they? 2.85%. They've more than doubled. And what happened just last week? Jerome Powell said that we need to tame inflation. He missed his numbers, so he's going to do what? He's going to increase interest rates. That's going to have a couple big impacts on the housing market. One, it's going to obviously impact buyers' affordability to purchase properties. Two, it's going to impact sellers' ability to get a good price for their property. But there's also a missing caveat here. When rates increase, what happens? Investors pull out of markets. Investors stop investing into big companies. Mainly shipping and distribution become more expensive as gas prices rise, all of which gets pushed back to the consumer. So we're going to likely see more financial turmoil in these markets, and I think we're going to be stepping into a huge opportunity to invest in real estate and to make some really amazing investments because, as the old saying goes, you want to be greedy when people are fearful. People aren't fearful just yet, but trust me, we're heading in this direction. It's going to be real, it's going to be big, and the opportunity is going to be endless. Take a look at this. Now, if you have a 700 credit score, most people don't have a credit score at 700, by the way. It's just under 700. So what are the rates for, let's say, a 680, 690, 6.64%, 6.64%, almost 7%. This is unbelievable because at this rate, we could hit 8% rates or maybe even more by the end of the year. And what would that do to housing costs, right? What would that do to the housing market? So right now, $500,000 property, which is, not that expensive anymore. A $500,000 home with $100,000 down, 20%. This was 8 months ago, 2.85%. 30-year fixed rate payments are $2,112 and $22, right? This includes property taxes, insurance, and interest, right? So 21, 22. Now, what we would see now with these new rates at 6.64%, it's $3,000 a month. So it's about a $900 increase, about another, $11,000 per year. Pretty substantial. Now, how much money do you need to make to be able to qualify for one of these properties? Household income between $165,000 and $200,000, which, isn't that much anymore. Two working people, they're probably, maybe making $150,000, $125,000, $175,000, $200,000, somewhere in that range collectively. And now what's going to happen? This is what's going to happen. This is going to have a huge impact. 4.7% of all mortgages across America are adjustable. 4.7%. And so if you look at 142 million households, right, 142 million houses in America, it's 6.9 million homes, 6.9 million structures that are going to see increased rates either immediately or soon, as if they have a 5-year ARM or a 7-year ARM, they're going to start to get hit with these higher rates, which is ultimately going to be matched with this new problem here, which is home insurance. Home insurance is going through the roof, especially in key markets like Florida and Texas and a lot of these other markets. They're getting hit with increased premiums. So how is this going to look? How is this going to impact us? Look at this. As inflation grips the country, the price of everything has been going up, and home insurance is no exception. What's going to happen as well when everything gets more expensive, shipping gets more expensive? What do these insurance companies do? These insurance companies are like banks that are large institutions. What are they going to do? They're going to push all the cost, all the increased labor cost, all the increased material cost, all the new damage, all the new fires, all the new floods. Everything is going to be pushed back to the consumer. You have to remember too, when we step into a recession, there just happens to be more property fires. There just happens to be more claims. People are more desperate for money. They're going to push all of this back to the consumer. So, according to Quote Wizard, an online insurance marketplace and subsidiary of LendingTree, rates have increased at least 34% in some areas of the country as revealed in their new state home insurance. 34%. In order to compile the report, Quote Wizard analyzed homeowner insurance rate in every major carrier in every state. On a national level, the average cost of homeowner insurance is $1,766, up just 2% from the prior year. But many states have seen more dramatic increase, especially the states in which have seen a large spike in demand the last couple of years. Prices have changed wildly in the last year. Depending on where you live, you could be paying a lot more or a lot less, depending on everything from 25% decrease in Kentucky to a 34% increase in Idaho, says Nick, a research analyst of Quote Wizard. The most expensive state to insure an average home was Oklahoma, where annual premiums topped $3,735. Hawaii was not found was found to be the cheapest state where premiums were $412. Idaho is the largest increase in home insurance premiums at $34, while Kentucky experienced the largest decrease in home insurance by negative 25%. Another national statistic, insurance prices decreased in 16 states but increased in 30. Quote Wizard reported also highlights a growing problem facing many homeowners. Home prices and material costs have risen so quickly, many people's insurance plans have no longer fully covered them. It now costs around $40,000 more to build the same home. And if you haven't updated your coverage, that's going to cost extra to come out of pocket. Only 3% of homeowners claims are liability claims. The other 97% are property damage claims. The most common type of home insurance claims are wind and hail, 35% of the claims, average about $10,900. Water damage, 29% of claims, average about $11,000. Fire and lightning, 25% of claims, average cost $78,000. Other types of property damage, 7% of claims, average cost $6,400, and liability, 3% of claims, average cost $22,400, and theft, 1%, about $4,300. Now, what I think is going to happen here is property owners are getting hit with many different curveballs right now. One is the property insurance. 2 is increased rates. 3 is going to be increased utility bills. Utility bills are getting extremely expensive in many markets. And then also, these same property owners are being hit with increased gas prices and everyday living costs. So as everything is continuing to increase, some people that are inside certain markets in which their costs are picking up exorbitantly more than everywhere else, what are they going to be doing? People are going to be downsizing. What are home buyers going to be doing? They're going to be on the sidelines saying, you know what? I waited this long, might as well wait another 6 months, wait another year, right? As that happens, what do you think is going to happen? There's going to be more sellers out there fighting to get a buyer to buy their property, and then supply and demand are going to determine and dictate price in many cases. So how is this going to play out? I believe a couple things are going to happen. One is I think that the markets in which are prone for more expensive insurance, these buyers are going to get a little bit more cautious, saying, you know what, this is what insurance were 2 years ago. This is what they are now. This is where they're projected to go by 2024 or 2025. I need to factor this in to see if I can actually afford this, right? And what is that going to do? It's going to be a big problem for these home sellers that miss the boat in these markets. People are going to start getting a little bit more cautious as it becomes more clear just how much risk there is in certain markets for property insurance. I also think we could see a situation in which there's some big opportunities for large investors to run out there and acquire large blocks of property, but also huge opportunities for everyday mom and pop investors to go out there and purchase deals that are sitting with great credit. They have cash in the bank. They have a great plan and strategy. All of these things are going to really hold up well for a strong, smart, and a really focused investor. So I do believe rates are likely going to continue because they keep saying that there's no other alternative except to tackle inflation. That's the number one priority. And so if that is the case, then rates are only going one direction, and that is going to be up. But if rates hit 7.5%, 8%, which isn't that far from where we are now, it's still kind of far, but it's not so far. If it does hit that, what's going to happen? Prices are going to come down in a big way. I think the entry-level products, the entry-level homes are going to hold up a lot better. That $200,000 to $400,000 price point versus, say, the $700,000 to $1 million price point and above. I think those price points are going to get hit much harder as it's more expensive to insure these properties, and the monthly payments are going to be so much more expensive. But with that comes big opportunity as well. I think if you're looking to buy a huge house, some beautiful property, you wait a year. Wait until things get a little more crazy. And then you run out there and you buy that dream home. Opportunities are coming for the smart and savvy investor. If you want to get started on YouTube, you want to invest in real estate when things hit the fan, you need help with your credit, get everything in line. It's one thing that I've noticed. I was a real estate agent in Beverly Hills for over a decade. People always say, I'm going to buy when the market cools down or when this happens or when that happens. And I would talk to a lot of first-time buyers and they would say that. But what ends up happening is that they're all in their head thinking that this perfect scenario is going to unfold where the market's going to crash. And they're like, okay, I'm going to go buy this property for 50% off. But yet they have no pre-approval. They never spoke with a mortgage broker. They don't know if they'd even qualify. They haven't checked their credit in forever. They don't know what it's actually going to take for them to be able to pull the trigger. If you need help, when you really want to be positioned to buy properties when the market crashes, cashnow.video. Cashnow.video, private community, bi-weekly calls with me. It's an amazing, amazing opportunity for those that want to take advantage of the real estate market when things really hit the fan. And subscribe. Also subscribe to my second YouTube channel. It's an interactive show and a podcast starting this upcoming week. I'm really looking forward to it. The link is down below, top comment, pinned. And follow me on LinkedIn, Twitter, Instagram, TikTok. Everything's in the banner. And catch you guys in the next video.